This video explains proposals in International Nonprofit Accounting Guidance, Exposure Draft 3, relating to donor reporting by nonprofit organizations. The guidance is found in INPAG Section 37 and in INPAG Practice Guide 1, Supplementary Statements. General Purpose Financial Reports show information about the NPO entity as a whole. They can be used by a broad range of stakeholders, but are designed to meet the needs of those who don't have the rights to request tailored information. When funders provide grants for specific purposes, they frequently require reports about how those specific funds have been used. Such reports are special purpose financial reports because they meet the needs of a particular reader. Each funder can require their own format for these reports. The formats are often different from each other, so this can create a significant burden for grantee organizations. General purpose financial reports are therefore different to special purpose financial reports. The link between special purpose and audited general purpose reports is not always clear, even if they have been prepared from the same accounting system. Users often can't see how they reconcile or cross-refer to each other. This creates an assurance challenge. INPAG Practice Guide 1 has been developed to provide auditable information in a standard format, which can reduce the burden for preparers and the associated challenges. A common format for presenting the finances of a specific activity can lead to greater harmonization of donor reporting. A link to the audited general purpose financial reports produced under INPAG can improve confidence in the information and its assurance. INPAG provides guidance about general purpose financial reports. This includes the financial statements, which are commonly called the annual audited accounts, and a narrative report. In this video, we will refer to the financial statements as the main NPO accounts. The guidance about special purpose financial reports is in INPAG Practice Guide 1, Supplementary Statements. It sits outside of INPAG. INPAG is used to present information about the entity as a whole, with information that is useful to all users. The Practice Guide is used to present information about a subset of specified activities for an individual user. Disclosures in the notes to the main NPO accounts provide the means to create a bridge to any supplementary statements. This is because, where an NPO applying INPAG chooses to present supplementary statements in accordance with Practice Guide 1, it must also provide information in the main NPO accounts, as prescribed in INPAG Section 37, Supplementary Information. It is these disclosures that connect the main NPO accounts with the supplementary statements. INPAG may become part of mandatory reporting requirements for certain NPOs in countries that adopt it. Funders may choose to require or allow grant reports to be prepared using the format in the Practice Guide, even if an NPO is not following INPAG. The strongest benefits arise, for both NPOs and their funders, when an NPO uses INPAG for its main accounts, as well as using the Practice Guide for its grant reports. The objective of each supplementary statement is to present key auditable financial information about a set of the NPO's activities that is useful to stakeholders, particularly donors. Each supplementary statement is for a specified activity or set of activities. This may be for a particular grant, project, program, or an aggregation. A supplementary statement may even cover all of an NPO's activities. Each supplementary statement includes the transactions that relate to the activities specified in the statement title. All material transactions for the financial reporting period relating to those activities need to be included. The information must be reconcilable to an NPO's main accounts and underlying accounting records. There is a prescribed set format for categories of income and expenses, but flexibility about which information, if any, to show in other columns for comparison purposes. Feedback on the format of the supplementary statements is requested in the invitation to comment. Let's now take a look at the main elements of the prescribed format. Each material grant or donation for a specified activity must be separated. Where there are other income sources related to the specified activity, such as interest, these need to be identified separately too. Income for a specified activity has to be accounted for, consistently with the recognition and measurement requirements of INPAG. It's important to note that the income could therefore be recognized at a different point in time from when funds are received. Expenses are classified in the practice guide according to the following headings. Employment. This is for expenses such as staff salaries, taxes, and social security contributions. Travel and subsistence, for expenses related to travel costs, including fuel, vehicle running costs, accommodation, and subsistence, or per diems for traveling staff. Supplies and materials is a category that includes procured supplies and materials that have been used or distributed in the reporting period. The heading running costs, external services and other is for expenses such as rent, utilities, office supplies, costs of services, and any other costs related to the specified activities. Services in kind and gifts in kind is for donations in kind that have been given to the NPO and are being expensed. An example of donated services is free legal advice. Examples of donated gifts include low-value equipment or supplies. And finally, any grants or donations that are made by the NPO to other organizations or individuals. All expenses related to the specified activity have to be recognized on an accrual basis, consistent with the recognition and measurement requirements of INPAG. The prescribed statement format starts with income, followed by expenses. In this simple example, we have income of 100,000 and expenses of 80,000 as shown. The practice guide includes a distinction between direct expenses and support costs. Direct expenses are those that relate directly to one or more specified activities. An example is the staff costs of an employee who works on a single project as part of a specified activity. If that employee spent half their time working directly on one project and half working on another, their costs would be shared between the two. Even though the costs are shared, they are direct expenses because their time can be identified as relating to specified activities. INPAG uses the terms direct costs, shared costs, and direct expenses. Direct expenses includes both direct and shared costs. Support costs are costs which are necessary to administer and manage the NPO as a whole, but are not directly attributable to the specified activities, because they relate to all the activities of the NPO. For example, the staff costs of an individual who works on financial management issues that are necessary for the overall functioning of the NPO. Support costs may be included as a separate expense category using the line item permitted in the supplementary statement. Alternatively, they can be allocated to the various expenses headings on a line-by-line basis. Salaries related to financial management could therefore be included within a single support cost line or shown within employment costs. For more information on the INPAG proposals for the allocation of expenses, please see the classification of expenses video. The prescribed format has headings for direct expenses and support costs. As you can see, these headings are useful when the support costs are shown separately, rather than being allocated to the various expense lines. In addition to income and expenses, there are 3 other categories of transactions that are included in the prescribed format. These include foreign currency translation gains or losses, for elements of gains or losses that arise in relation to the specified activities. Transfers between funds, for any transfers into or out of the fund related to a specified activity. For example, a donor might give permission for unspent funds to be transferred to another project or to funds without restrictions. The NPO's main accounts include a statement of changes in net assets and a note called Movement in Funds. Any relevant transfers between funds reflected in those statements or notes must also be reflected in the supplementary statement. And finally, any other financial movements that have been included in the statement of changes in net assets within the NPO's main accounts, and relate to the specified activity. The three other categories appear directly under income and expenses and are followed by a calculated line called change in grant or fund balance. Below that, we see the opening and closing fund balances, which must agree to the main NPO accounts. In this example, the income of 100,000 minus expenses of 80,000 results in an increase in the fund balance of 20,000. The opening fund balance is 0, so the closing fund balance is 20,000. INPAG requires that NPOs account for inventory and capital expenditure on an accrual basis. This means that inventory is shown as an expense when it is used, and capital items are shown as an expense over their useful lives through a depreciation charge. However, if an NPO receives a grant to pay for inventory or capital items, donors may want transparency about the purchase of those items. The supplementary statement solves this by including an optional section that can be used to show inventory and capital costs on an acquisition basis. This enables the NPO to show how the funds are used in the period that the costs were incurred, rather than when the inventory is used or the asset is depreciated. The practice guide permits inventory costs to be presented separately. Where this option is chosen, the expenses relating to the use, distribution, or write-down of grant-funded inventory need to be identified and removed to avoid double counting. Then the amount of inventory purchased is added to the expenses. Similarly, the practice guide permits capital costs to be presented separately. If this option is chosen, the costs of depreciation or amortization of grant-funded assets needs to be identified and removed to avoid double counting. Then the amount of capital expenditure or asset purchases is added to the expenses. In this simple example, there were no expenses relating to inventory use or asset depreciation, but 10,000 was spent on inventory and 10,000 on capital items in the period. Where this option to show inventory or capital costs is used, the opening and closing balances will include adjustments for the cumulative effect of adjustments in prior years. The invitation for comment for INPAG Exposure Draft 3 includes a specific matter for comment on these proposals for the disclosures for capital and inventory-related costs. If applying Practice Guide 1, an NPO is required to present information for the financial reporting period using the prescribed format. However, it may also choose to present additional information in separate columns. This information will depend on stakeholder needs, but could include an alternative currency, budget amounts associated with the specified activities, prior period amounts relating to the specified activities, amounts for each line split into 2 time periods, which together make up the reporting period covered by the general purpose financial statements, and separate columns for different income sources. To help visualize this, here is a simplified version of the report with columns for donor currency and donor budget. Here is a version showing different periods, which could be helpful if grant reporting periods differ from the financial year. This version shows different funding sources for a particular activity, which could be helpful in showing the full costs of carrying out an activity, including support costs, even if they were not covered by the funder. Each supplementary statement has its own set of explanatory notes to aid users' understanding. The information in the notes will describe the purpose and scope of the statement and how it has been prepared. The notes will include a description of the specified activities and cross-references to relevant information in the main NPO accounts. They will also confirm whether the supplementary statement has been prepared on the same basis and using the same accounting policies as the main NPO accounts. The notes will also set out any specific accounting policies used that are relevant to the statement. It is expected that the same basis and policies will be used unless there is a specific requirement to use an alternative. The notes must describe any material differences. NPOs need to provide additional notes where relevant. Here are some examples. An income note that explains the mix of grant or donation income or describes other sources of income. An expenses note that provides reconciliations for cost lines, where donor accounting rules differ from INPAG. The note could also describe ineligible costs where relevant. A note on support costs to describe the basis of any apportionment to the specified activities, and an indication of where these costs are included in the main NPO accounts. Where they exist, a note on foreign currency translation gains or losses must show the relevant rates and calculations, including the extent to which they are unrealized. Where the optional section for inventory has been used, a note is needed that includes the gross value of the inventory acquired and expenses charged for their use, distribution, or write-down. Similarly, where the optional section for capital expenditure has been used, a note is needed to explain relevant amounts, including details of the assets acquired and any depreciation applicable to the assets. If helpful or stipulated as a donor requirement, NPOs may provide a reconciliation between the income and expenses recognized in the supplementary statement on an accrual basis to the cash amounts received or paid in the period. If an NPO presents a supplementary statement for all of the NPO's activities in the reporting period, a reconciliation is required, showing the relationship to the general purpose financial statements for total income, expenses, and the movement in funds. Supplementary statements and their notes must be clearly separated from the general purpose financial statements and their accompanying notes. The supplementary statements may be included as an annex to the financial statements. If a supplementary statement and its notes are audited, the nature and scope of the audit opinion needs to be clear. Where a supplementary statement is not audited, this should be clearly marked on the supplementary statement. We are requesting feedback on the proposal that the supplementary statements can be published as an annex to the general purpose financial report. If an NPO is applying INPAG and presents supplementary statements in accordance with the practice guide, then Section 37 must be followed. If an NPO is not presenting any supplementary statements, then the requirements of Section 37 do not have to be met, but NPOs can choose to disclose this information even if they do not use the practice guide. Section 37 specifies the information that must be disclosed in the general purpose financial statements. It requires that the NPO provides the same information for a supplementary statement, but for the whole NPO. It is this information that provides an auditable base from which the supplementary statements can be produced. NPOs are encouraged to produce the information in a single statement using the prescribed format, as it could be useful to all stakeholders. But this is not a requirement, as long as all of the information appears in the NPO's financial statements or accompanying notes. Importantly, if an NPO splits out support costs in one of its supplementary statements, it must also disclose support costs for the entire entity. This could be used to calculate an audited indirect cost rate, which may be helpful in negotiations about cost coverage between NPOs and funders. Supplementary statements and supplementary information must be prepared using the recognition and measurement principles required by the relevant sections of INPAG. Supplementary information must also be prepared using the same whole of NPO reporting boundary as the general purpose financial statements. If different recognition and measurement bases or reporting boundaries are used, that NPO must explain why. This is not expected to be common. This video explains the optional guidance in INPAG Practice Guide 1, Supplementary Statements. This responds to stakeholder requirements for a prescribed format to present key auditable financial information about a specific project or grant. The practice guide sits outside of INPAG as it relates to special purpose reports rather than general purpose financial reports. Section 37 of INPAG on supplementary information must be followed where the practice guide is used. This provides an audited base for the supplementary statements. The prescribed format has consistent income and expense categories. but it also provides flexibility to respond to the information needs of stakeholders, including the option to present support costs, inventory costs, and capital costs separately, and to provide additional information, such as amounts or budgets in donor currency. Finally, supplementary statements must be prepared using the same recognition and measurement principles and accounting policies as INPAG. To respond, visit www.ifrfornpo.org/have-your-say. Download a template response document and upload your completed response or comment letter. Responses must be in English. The deadline is the 16th of September, 2024. We look forward to hearing your views.